Yo, what's going on, everybody? It is Thursday, January 4th. How's everybody doing? So the market was down today. I think Dow closed just with a slight positive close. Early today, when I think the Dow had a pretty good rally at the opening, up something like over 200 points. And I sent out an email to my subscribers saying that's not going to hold. The market's going to be coming down. And sure enough, it did. And the reason I said that is because, well, a couple of reasons. But what's interesting is that those first of the month payments that I talk about right around the first of the month all the time, that's the big payments day when you have Medicare, Medicaid, military pay, veterans benefits, all those big payments that go out on the first. Sometimes there's even a Social Security payment in there, okay? It was like 130 billion. Okay, that was last Friday and Tuesday, those 2 days. Remember, I was saying I wasn't sure if those payments were going to be made on Friday or if they were going to be made on Tuesday. They were split up on both of those days, Thursday and Friday. It came out to like 128 billion of a leading flow, okay? That's what the government sent out. What it took back in taxes was like 100 billion. So the net flow after taxes was like a ridiculous 28 billion. After 128 billion leading flow, really what's left in the economy was 28 billion. I mean, that's a huge drain from that leading flow. Nevertheless, these leading flows, I mean, they're strong. Okay, I'm not going to lie. They are strong, but right now they seem to be only capable of keeping GDP growth at around 2.3%. And I'm not sure the reason, what the reason for that is. It could be a higher propensity to save. People may be saving more and not spending as much. But that's the reality. I mean, we're looking at, big leading monthly spending flows that in the past have supported like a 4.5%, 5.5%, even 6% GDP growth rate, and now it's only enough to support a 2.3% growth rate. Now, is that bad? No, it's not bad for the stock market, but like I said in my last video, it's like, to use the swimming pool analogy, where previously the rate of flow out of that pipe into the pool was very rapid. I won't even use that analogy because the rate of flow is still rapid, but it's just not filling up as quickly, maybe because there's a drain there's a crack at the bottom of the pool, and that crack is savings. If people save and don't spend or invest, savings, we call this in economics, savings is a leakage to demand. So you see, economics even uses the water analogy, a leakage, right? I mean, they don't talk about swimming pools. I do, but there they go. They say savings is a leakage to demand. So there's nothing wrong with a 2.3% savings rate. A 2.3% growth rate. It's just that, it's not as fast as what it was. So you're going to have a lot more play in the stock market. What do I mean by that? I mean, you're going to have more, this year I think you're going to have more back and forth trading action. But I don't, I don't advise that you try to do that. I know I tell you guys about these, these quarterly cycles and stuff like that, where you have tax drains and then you have quarterly interest payments, and I give you that in advance. But in general, I say you should try to avoid that. And the thing you should do is wait for these pullbacks and just, build your stock portfolio. Like, keep on adding. Like, you want to go through life accumulating good assets. That's what's going to take care of you in the future, okay? And the younger you are and you follow this advice, the better off you're going to be. I mean, you just want to keep accumulating assets, and you want to do that, you know, focus on good companies. Like I always say, focus on companies that are leaders in their industry. And when people go nuts and they sell them off because they panic, and that happens all the time, folks, that happens all the time, then you step in there and you buy and you accumulate. And that's what you do. And when the market goes way up, you don't chase after it. And you don't get into this FOMO crazy mentality, fear of missing out. You know, people, they do it on the downside where they sell at the bottom, and then they do it on the upside where they chase. And I gave you examples. I said even professionals, and I use that term loosely, but professionals on Wall Street, that's how they behave. They all do the same thing. We saw this back in October last year when they sold out at the bottom in that correction. And I was here saying, you got to buy the dip, you got to buy the dip. And we saw this, you know, in the second half of December when it went straight up and they jumped in like crazy. How do I know this? Look, I look at futures positions of institutional asset managers, and like they dumped out massively in October, and then they jumped back in late December, massively. Okay, I mean, this is not a winning strategy. This is not a winning strategy. So, I want to talk about, you know, sometimes, I don't know the words to use, frustration, anger, incredulousness, I don't know. But like, I saw a report today from the Wharton School at the University of Pennsylvania. I went to school there, okay? Now, Wharton has become a disgrace in recent days, like a lot of these Ivies, for other reasons. But this has to do with a report that I saw from the University of Pennsylvania saying that at what level will the U.S. debt become unsustainable? And here we go. Like now, and this stuff, I've been telling you guys, this stuff has been all over the place. And the problem is, I mean, the big macro problem with this is, like I said, like, it's like a bad belief system is like a disease in the body. If you don't eradicate the disease, what happens? It's going to kill the body, right? So this belief system that the U.S. has this debt, this 34 trillion, which it's not at all a debt, at least in the conventional way we think about debt. I mean, this is just 34 trillion of untaxed dollars held in the form of government securities by the entire world, okay? It's 34 trillion more that the government spent, in other words, injected into the world, than it took away in taxes. So that resides, you know, that's part of the assets of the world. It's not what we owe, it's what we own, okay? But it's never talked about that way. It's never understood in that fashion. That's what it is. It's not, I'm not making that up. That's exactly what it is. But anyway, here's the Wharton School of Business. And I'm just going to talk about it. I'm not putting anything up on the screen or anything else like that. I keep these videos simple. So they said, at what level and when will the debt become unsustainable? Again, the unsustainable is not even a word or a term applicable to what the actual situation is. Again, it's just $34 trillion that people own, that they just hold, you know, people, institutions, governments, all that stuff, that they hold in the form of U.S. government securities. So they say, well, when it reaches 200% of GDP, again, they just, and I've seen this 200%, it's kind of like they just arbitrarily pick some number out of the air, 200%. Like, who came up with 200%? Why 200%? Like, where does that come from? No, there's no explanation of why 200%. Why is it not 150%? Why is it not 500%? Where does 200% come from? When it reaches 200%, it's like some time bomb is going to go off. And then they say, but we can last for 20 years, but we got to do something over the course of 20 years. So why 20 years? Where does that come from? They just fucking pull some stupid time frame out of the air. 20 years. No explanation. It could go for 20 years. Then they try to be slick because maybe one of their analysts or professors, I don't know what, they're thinking like, but Japan has it way bigger than the United States, and that didn't implode. So they feel obligated to address this. And they said, well, you can't look at Japan because Japan has a higher savings rate, which can absorb. Okay, this is just crazy because how can Japan have savings denominated in yen unless the government spends more yen, in other words, puts more yen into the economy than it takes away, than it removes? The only way that, because they try to say that it's the savings of the Japanese people that finance Japanese government spending, when in actuality, it has to be the reverse. You have to have the yen there to buy Japanese government securities. And the only place the yen can come from is from the Japanese government. So this is Wharton University of Pennsylvania. This is considered one of the top elite business schools in the world, really. Now, the same thing, so they completely lack an understanding of this. They think that the yen just somehow, I don't know, miraculously appeared into the hands of Japanese individuals and institutions. Like, where did it come from? From outer space? Did aliens beam it down? Did they make the yen in factories in Japan that people, then they distribute it to people so that the people can... No, it has to come from the government of Japan. So they completely missed that. Now, the same thing correlates to the United States. All right? The United States, the dollar, if you want to call it savings, the amount of dollar-denominated financial assets held by the non-government, that's 34 trillion. That's the so-called debt. And it was put there by the U.S. government spending 34 trillion more than it removed in taxes. It's an asset that the non-government holds. Anyway, I think you guys get it. And I see this stuff, 200%. Where the fuck did you get 200%? You just pulled it out of the air. 20 years you can go, but something has to be done. What has to be done? What has to be? This is why, and by the way, folks, these predictions have been going on. These predictions have been going on for 40 years. Okay, about how the debt was going to implode everything. And again, it's another one of these situations where no one in academia, no one in mainstream economics goes and tries to think about, well, why hasn't this happened so far? They don't care. They're just going to say it'll happen in 20 years unless we do something. It's got to go to 200%. And again, they were slick because they said, well, it's not really that high because a portion of the debt, I think it was like 7 trillion or something like that, is what the government owes itself. Okay? Because government debt owned by certain agencies of the government is like one pocket, owes the other pocket $20. It's the same thing. But they don't get the fact that it's 34 trillion owned by the non-government of the world, US dollars, that have those are untaxed dollars. We own them. It's part of our assets. And the only way that we can have those dollars, and the only way that Japanese people can have those yen, is for the government of the United States and the government of Japan to put that money into the system minus what they're taking away in taxes, so that there is a surplus in the accounts of the non-government. That's it. This is not so hard. But the framing of it has people completely freaked out and discombobulated. And because it comes from Wall Street, it comes from the University of Pennsylvania, it comes from Harvard, it comes from academia, it comes from economists, everybody thinks it's true. And it's not true. But like I said at the beginning, this is like a very serious disease. It's a belief system that essentially is like a disease in the body. And if it's not eradicated, and I'll be honest, I don't think it's ever going to be eradicated, and I think eventually one day it'll lead to really bad consequences. But you know what? Me personally, I stopped worrying about it because I know what to do. I know how to protect myself. You know, if they decide to do something and go on austerity or something like that, thinking that that is the path to resolving this thing, which is bullshit, it's just going to make it work. I know what to do. Knowledge is power. I know what to do. Now, I don't think that's going to happen right away, but I'm pretty sure at some point it's going to happen. Okay? I'm pretty sure at some point it's going to happen. And I want to say one final thing on, news that is, it's not new news. I mean, it's been around. It's about members of Congress who trade the market on insider trading. Now, I'm going to take a different view on this just because I'm a realist. Okay? Now, we could sit here and we can get all worked up and all angry about fairness of the system and how can these people do it, and if we do it, we get in trouble, maybe get fined, maybe go to jail even, okay? How do we have a system like that which is not fair? We can have this discussion about fairness. I do not engage in that because, life is not fair. And if you're walking around, and I used to be very, very much like this, like stand on, what do they call that? Stand on principle, and it's not fair, and blah, blah, blah. And if you're walking around saying it's not fair, you're just going to be, there's so many things that are not fair. Little kids who get cancer, that's not fair. Things like that. If you're walking around talking about how this is not fair, you're just going to aggravate yourself and you're going to be a miserable person for the rest of your life. I can tell you this right now. If you know what to do, like if you understand all these things that I teach you and stuff like that, and if you invest smartly, then you can beat these members of Congress and you could do very, very well for yourself, and you can stop walking around thinking that life is fair and making yourself miserable. We're not going to change it, man. We're not going to change it. I don't have the power to change it. You don't have the power to change it. But you have the power to do something for yourself. And I hear so many people bitch and complain. And I understand it. Believe me, I understand it. I'm not like, I understand it. And I used to be one of them. But I don't do it anymore. I don't do it anymore because I'm fine with my situation. And if somebody throws a curveball at me, if the system throws a curveball at me, I have the understanding and the knowledge to deal with it. And I know it's a cliche, and when you hear people say knowledge is power and blah, 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 but it is. What do you want me to tell you? And you know what else is power? Self-control, behavior, doing the right thing, discipline. That's power. I got some people laughing out there. It's not laugh track on my thing, believe me. I don't know, it's neighbors. All right, that's it for today, folks. Go to my website. Get knowledge. Come on, man, everybody. pitbulleconomics.com. Bye.